Welcome to the SPX Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Friday, June 22nd, 2012. For the market internals today, the New York Stock Exchange Advanced Decline Differential closed at 1,079. The Nasdaq Advanced Decline Differential closed at 1,021. There were 5 new 52-week highs for the S&P 500 and 5 new 52-week lows for the S&P 500. Pretty neutral, as you can see here. For the volatility, there were 215,000 contracts traded on the VIX today with 36 million in total premiums paid. Some light volume here today, as you could see. On the dollar-weighted put-call ratio for July, we saw a 0.33 reading, kind of neutral to bullish, with 56% of the total premiums paid. On August, we saw a 0.67 neutral reading, with 36% of the total premiums paid. Here we have the daily chart for SPX. You can see here we had an update today, kind of a bounce after yesterday's sell-off. We stopped yesterday at the 0 sig line. We mentioned that today we're 9.5 handles higher, stopping at the positive 1 sigma. So from here on, the upside target would be here, the 1363. We're gonna face some resistance of the trend line that we've drawn so far. We broke yesterday, and on the downside, key level to hold is the 1320, which is the 0 sig line. That's going to be a critical level to hold. If we're able to break it to the downside, we're looking at the 1300, 1298. 1300 is going to be pretty close to that. That's an important level, which is also really close to the 200-day moving average, which is at 1295 so far. So that's going to be critical test here at the 1300, 1295 level is going to be pretty important test to the downside. You can see here the CI is flat right now. CI did flat, so that's what we're looking at so far here on the SPX Daily. For the weekly chart on the SPX, you can see here we had a red bar, a more bearish sentiment here on the weekly chart. We tried to bounce here after making the lows, but we could not. We failed at the 0 sig line, which was pretty bearish here. That was yesterday, and then we sold off pretty hard, so that was bearish here on the weekly chart. On the weekly levels, we're also looking at the 1288 level. That's gonna be the next level here to face on the downside, and on the upside, we're looking at the 1360 level. That's gonna be a critical level to break to the upside. 1360. That's pretty close to the one that we just mentioned on the daily chart on our upper trend line that we've drawn. One thing we could see here, we may be looking at some lower lows here. If you could see here, lower high, maybe here we're making a one low and maybe make a new lower low here. That's just a hypothesis here right now, nothing so far. We'll have to look how the weekly chart starts to face next week and so forth. So on the weekly chart, you could see again on the CI flat, CI diff flat also. Now let's look at the SPY to get some levels. On the weekly chart so far for the SPY, we need to break the 136 level. That's the 0 sig line on the weekly chart, and we're looking to the downside, the 129 level, and then the 26, basically the 2570 level. That's below the lows of the year, so that's one thing to take into consideration. Again, we mentioned the 200-day moving average. That's going to be critical to break. The 200-day moving average for SPY is 129.73. That is pretty close to the 129.21 on the negative 2 sigma for the weekly chart. So around those levels would be our target for the downside. Again, on the upside, we need to break 136 level to go higher. Now we want to look at GLD. We're going to start here with the daily chart. We had a hammer here, positive. We were 0.4% higher for the day, which is good. We're right now at 152.64. Pretty similar to SPY here. We made a high here and a lower high here, which was not good at all. We were talking about the trend line here that we had drawn. We broke it, now facing a downward trend. We're gonna see what happens from here. Our levels to watch on GLD, sorry, it's 155.30. That's 0 sig line on the daily chart, and on the downside, we're calling for this triple bottom here around the 148, 149 level. This would be a quadruple bottom here. We're gonna have to see if it holds below that. It gets pretty ugly. Now we're gonna look at the weekly chart for gold to see what we get here. On the weekly chart, a big red candle, almost failing at the 0.6. Also negative here for the weekly chart on GLD. You could see here high, lower high, almost basically same high, and now we're starting to make a newer high and a lower high here. So not good here on the weekly chart. Again, CI flat and CIDF also flat here. So we're looking for the 149 level, pretty much same level on the daily chart, and the last level we're looking on GLD is the 144.40. That's the -3 sigma on the weekly chart if we are able to break that triple bottom we have so far. Here we have an interesting setup on the monthly chart that I want to look at right now. You could see here on the monthly chart we're at the 0.6 line. It's going to be critical to hold this 0.6 line here on the monthly chart. If we are able to break it, we broke it only on 2009 in the summer, you could see here. After that we bounce back. We're gonna see what happens if we break it, but again, if we do break it, next level we'll be watching on the monthly, which is a long term, is the 141. So we'll keep up an update on that, but just one thing to have into consideration here. Now looking at the VIX, here we have the daily chart for the VIX. Today we were down 10%, 9.8. After yesterday we were up 16%. You can see here an inside day for the VIX at 18.11 closing. We still have some good volatility. We like the VIX below 20 as we've mentioned so far, but not much happening here. An inside day as expected after yesterday's huge day. On the weekly chart for the VIX, we broke the 0.6 line, which is positive on the weekly chart. Looks like we're turning around also on the weeklies. So now we're looking for a consolidation here at the 18, 17 level, maybe 15s. That's gonna be our levels right here. We're not gonna go much lower from here, so we just wanted to stay around these levels and easy from here. So to see what happens with the market. If the market breaks here and we go to the upside, we would like to see a higher high here. That would flush everything, and maybe we start to again back on the SPX. So we'll see what happens from here, but that's what we have so far on the weekly chart for the VIX. Here we have the McClellan Oscillator chart, as you can see here. Right now we are at 131.39. Still a pretty high reading. We want to see it come down somewhat and then we get a rally. But still we're not extremely overbought, but somewhat overbought on the short term. So that's one thing to take into consideration here. For the last chart, we're going to look at the number of 52-week highs and 52-week lows for the SPX, sorry. Here you can see it was what we were seeing on the rally. Then huge drop here, now going the other way. 5 new 52-week highs and 5 new 52-week lows today. Pretty much flat, as you can see here. We're gonna look at the weekly chart for this one. One thing here you can see that I really don't like here in this formation for a longer run higher on the market. Look how this dropped from 50 down to 5 on the weekly chart. A big tail on the top. We only got 5 new 52-week highs for the S&P 500 on the weekly chart. We were almost at 60-50, and we did finish at 5 new 52-week lows for the S&P 500. So that's one thing to caution here. This big drop, as you can see, not so positive for the market overall. But that's it for the charts this week. We have a special offer by TradeStation. Get your Hamsey Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great weekend. I'll see you Monday.